All right, hey everyone, good afternoon. What a amazing day in the Nasdaq. My name is Jack. I am the Director of Option Strategies and Micro Futures here at Simpler Trading. And I wanted to just go through and talk to you about some of the things that I'm looking at as far as a 4 or 5 day outlook. And today's interesting because you had a lot of names that have had a lot of momentum over the past 2 weeks that were kind of quiet to down. And whenever I take a look at momentum stocks, I'm mainly talking about Zoom, Peloton, Carvana, Wayfair, Restoration Hardware. The list goes on, I promise. But I'll tell you what, Nvidia is my main focus. And then we'll talk about gold and silver. I think that's important, and also one of the major concerns that I have about commodities in the market is, when does gold start to get a bid? I think it's probably one of these things where we could be patient and wait for a good entry, even though the entry does seem pretty good right now. I see what you're looking at. Let me go ahead and go into a different workspace that'll be a little bit easier to see and understand. A couple things about futures real quick. So I've been teaching a class since Saturday about how to trade micro futures. And I wanted to go ahead and show y'all something. We have live trading tomorrow and Thursday, and then the next Tuesday. I just want to show you the sign up sheet. I've been growing a small account pretty well, and just wanted to present this real quick. And if you wanted to be if you wanted to check out what I've been going through, we have a thing called 10x bars, really awesome indicator to give you market conviction. And so we always say, whenever you're dancing with the market, let the market lead. And with the 10x bars and trading, it's really something that it's a no-brainer situation. So I wanted to invite you to sign up for this. The live trading is starting tomorrow, and that'll be opening bell to 10:30, so 2 hours. And throughout that time, we'll give you some more information about trading, beginning traders, how to grow a small account, things like that. But sign up. Hopefully we can get something just the same as today as far as volatility. I have no doubt that we will. I think it's a really interesting time in the markets. We're definitely in future season. If you want to get good information, probably I would say the best information for learning a little bit more about micro futures and understanding how dynamic they are, you can sign up for the class. That's a recording. You can also sign up for the live trading, which is the pro or elite package. And I will see you there in live trading tomorrow. And I think it is well worth your time, your experience, and all I'm trying to do is shorten that learning curve for you so you can get out and do this on your own a little bit easier with very, very, very significant information that'll help you improve as a trader. Let me show you something real quick. Let me get out of here. I have no idea why that screen was on there. Anybody talks about technology? But here we are, the Nasdaq, and even after hours in the extended session, you had a 100-point move. Pretty wild stuff. I mean, we've seen this before, no doubt. We know that the gold futures and silvers, and we can take a look at GLD anyway. But once again, gold down about half a point. Okay, so why? Well, we have inflation. 2020 has also been kind of about how correlations have loosened up. Mainly, I'm talking about TLT and bonds. So we can take a look at gold. Obviously, that trend has been breaking down. And since about 2 weeks ago, we had a really nice little bump, and that was mainly last week, and a little bit of last week as well. All right, so check this out. Let me show you something that is interesting to me. So a long time ago, back in February, March is whenever it started. I started to take a stronger look at TLT just because the movement back in June and July was very, very interesting. In fact, you had a lot of volatility here as TLT started going higher. Now, what did we see in February and March? We saw a huge move to the upside, about a 30-point move in TLT on the left-hand side of your screen. All green 10x bars. Once again, my workspace includes the 10x bars. This is market conviction. You don't have to do any of the guesswork here. We have this as a downloadable indicator through thinkorswim. Easy peasy. All you got to do is import it, And then it gives you exactly the momentum, the direction, and all you have to do is kind of look at this and go, all right, green means go, red means bearish, yellow is a little bit non-directional, and then if it has green 10x bars here with the dots, that gives me 50% more average volume than the previous dot, and this translates across all time frames. Pretty easy, right? Okay, that's what I think too. Check out Nvidia. Nvidia on the right-hand side on a 4-hour chart from today. Pretty fantastic move. Let's go back to where it really exploded. This is about 3 weeks ago, right in the middle of August. A post run after earnings. Look at this, green 10x bars. Easy to stay in the trade if you're in it. Easy to stay in those long calls if you're in it. It continues to go. Another indicator that I love are the voodoo lines. I will go 10x bars first. I will see where we are heading. And these are based off of Fibonacci and Elliott wave levels. Super, super convenient to trade with. And then also one of my favorites right now, even though it's taken a little bit of a break, is Wayfair on the left-hand side. A couple things here. I think we're about to experience a major short squeeze once again. Restoration Hardware on the right-hand side. You can see green 10x bars again. Easy for me to stay in a trade if I'm long. Easy for me to get out if I'm starting to take some pain. One, do I think the trend is breaking down? No. Do I think everything goes up forever? No. Do things consolidate and go back to the 21 EMA? Yes, they do. Or it could be the 21 period moving average, whatever you want to do. EMA, SMA, not a huge difference. Just kind of, it's one of those things in trading where you just kind of pick whatever works for you and maybe something that you've just found consistent. Here's Carvana. Carvana has a 28, I believe it's a 28% short interest float, which is huge. Okay, what does that even mean? Well, it means whenever shorts start to cover their position, there's going to be a magnifying event, right? And so we've seen that in Tesla. We saw that in a little bit of Restoration Hardware, to be quite honest. We've seen that in Activision pre-earnings before. So if you want one of my favorite picks right now, it's a 14-day run into earnings to the end of October for some Delta 40 calls, or even selling an at-the-money put credit spread in Activision for a run into earnings. And I do apologize if that is coming across a little bit too technical. I understand. I'll back up a little bit. So what I'm talking about here is look at previous earnings for Activision. I'll go ahead and highlight that here. Green 10x bars, super easy. Once the yellow 10x bars start to populate, you can get out of the trade. This is that run into earnings that I'm talking about. We have a squeeze. Pretty good seasonality for a continuation for the next time that we had earnings. And the psychology behind that is what happened. Let's say that you just have never traded Activision before earnings. Well, what you do is you go, okay, brain, look at the last quarter of earnings and just see what the trend was. And the trend was momentum. The trend was a short covering rally at least 3 or 4 days before earnings, which was kind of interesting. Usually it's a little bit earlier than that. So I'm thinking, we look at buying the long calls in Activision. Also, for all you gamers out there, the new Call of Duty is coming out, Cold War. I'm excited for it. Are you? The inner nerd comes out. The inner gamer is in full effect. But I think it comes out in November, right? So, I mean, the anticipation for that, even though it's not directly correlated to Activision, we know that downloadable content is a popular thing. We know that Microsoft has not bent or broken. Look at that 4-hour chart. Obviously, last week was good too. And hey, check it out. Look at the daily time frame right here on the right-hand side. The squeeze still hasn't fired. We do have a micro squeeze, and what that means is the volatility is becoming less and less and less compressed. I felt like Dr. Seuss right there. I love Dr. Seuss. All right, let's keep on going. Tesla. Oh, Tesla. Okay, here's another short squeeze situation. We have a micro squeeze on lower time frames. The daily time frame looks solid. No green 10x bars yet, but the momentum on the histogram has switched, and we're coming into earnings to the end of the month. Is it next week? It is next week. It's 9 days away, y'all. Y'all, I'm stoked about this. Let's check out the short interest float. Okay, so basically what I would do here is you could sell the 440 put and then buy the 460 put. So you're bullish. You have a bullish put credit spread. You're selling the put credit spread. That's one way to do it. Obviously, here's another thing, and this one is just it's interesting because it's kind of a new thing, relatively speaking. I mean, as far as a lifetime, but like Amazon Day, that's an interesting thing. Remember what happened last year? Way higher numbers than Black Friday. That's an interesting development on a national level. And this could be the event. I say this kind of tongue-in-cheek, but I also kind of mean it. The Nasdaq, look at this, daily time frame. So on the left-hand side, you have Amazon. On the right-hand side, you have the Nasdaq. Do you see anything unique about the Nasdaq right now? I do. I'll go ahead and tell you. We have a squeeze that is now turning into a micro squeeze right here. Y'all. So. Things to consider. Banks are reporting on earnings. Nasdaq coming out of a short squeeze, rolling into 12,200. We had a pullback right there a little bit earlier today. It's Monday. It's the first day of the market. A 400, 500 point move on the Nasdaq on a Monday. Not surprising. There was an interesting data point. Not sure if it's 100% correct, but it sounds 100% correct that 370 of the S&P points have been gaps up on a Monday out of 380 points in the S&Ps over the year of 2020. Even if that doesn't translate correctly, I know it's a long amount of time, so it's either since 2020 or going back a few months. It would make sense that it's 2020. However, the whole picture, the whole takeaway from that data point, even if it's off just a little bit, is Mondays are not weak. Mondays are not weak. Tuesday, we had our pullback from the tweet last week. We're stumbling into all-time highs. We're about 300 points away from that. Amazon coming in full stride, both coming out of a squeeze. Okay, so we know that so far. Here's what I want to do in GLD. I am going to wait because these are significant dates coming up. Okay, get this. Banks are reporting earnings, blah. Okay, great. Semiconductors will be reporting fairly soon. That'll have an effect on the Nasdaq. GLD, gold in general, these are long-term plays. This is a scenario, long-term view here. Zooming in on the left-hand side. Let me go to a daily chart. I thought it was on a daily chart. Now I'm on the 4-hour. The daily 8 is curving up through the 21, through the 34. We're testing the gap down from the first 10 days of September. Technically, if I bought it here, I'm chasing. But it's not by chasing a huge percentage. It's nothing that's too threatening. But in this market environment where we have a lot of events that would continue to push the market higher, we have the inflation, we have the election cycle, we have tech ripping and roaring, we have a lot of things. TLT not even I mean, it's correlating today. How could it not, right? You don't get off that easy, TLT. What I mean by that is pretty loose correlations for the past couple months. Not specifically like last week or the 2 weeks before that. Obviously, it's been kind of quiet. But how do I digest all this information? Well, I just want to make it simpler for you. Gold, if it continues to go right back down to 174, that's down to the 100 SMA. You buy that for January or February long calls, leap options, right? And then also just remember, whenever GLD goes, SLV is shortly to catch up. So we would want to buy SLV long calls as well. And then we come into the option chain. You can do GLD. Let's just do SLV first because maybe you're not familiar and it's like, okay, let's check it out. Options chain, January monthlies, that's the 15th. Open interest here. You have a lot of volume. 17,000 at the Delta 40s, and y'all, they're only $1.30. Okay, maybe you don't want to go that far out of the money. I get it. I hear you. Open interest at the Delta 70s, not much volume. Of course, this is going into January, so we know what January looks like. Let's take a look at December. Why not? We're about still 4 months out that way, right? No, we're not. 3. Well, let's do December. The last day of the year of 2021. How cool would that be to take profits on SLV the last day of the year? I'm just going to have to do it. But that won't be an entire position. And like I said, this week is a good week. It's expiration week, so you can totally profit in the long term by being patient with what's coming now. So I take a look at this and go, obviously the further dated in they're going to be, the more expensive all the calls are going to be, even at the money, even Delta 70s. And if you look at the Delta 60s, the difference is a month away is $1. Implied volatility still is sustained, and that's common. I mean, you can't just, it's not like Tesla where the implied volatility can be 200%. No, this is a stable, this is a commodity. This is not, if we're talking about specifically Tesla, it's not like those market makers are trying to manage their gamma. Hey, they give you long calls to buy. They're going to buy the stock. Over time, if you have a ton of very, very bullish option traders, they got to keep buying that stock. And that is what causes something like Tesla to happen. All right. GLD we can be patient on. SLV I can be super patient on because that usually follows afterwards. Nvidia is pretty solid here. I know Facebook got a good bid as well. Twitter has an upgrade. All this looks very strong. And so one thing that I'll talk to you about with Twitter is, upgrades, schmegrades, whatever. What I'm looking at is the technical chart. I'm looking at green 10x bars, and I'm easily able to discern that the move was on good volume, that we are now looking at continuation into higher highs. Twitter came on, it was blinking all over my 10% of 52-week highs. It was blinking on my 1% of 52-week highs. This is momentum. We also have a monthly squeeze. If you don't know what that is, let me just show you what it looks like. Okay, bada boom, bada bing. And what would you know? For the last month, we have a green 10x bar, and I can take off the Fibonacci levels. Those are no longer applicable. Probably one of the longest words in the English language that I really like saying, applicable. Drop your longest word in the comments. Don't do that. You don't have to. So the squeeze on the monthly chart is a micro squeeze. This one in Pinterest, man, I tell you what, this is it's some interesting data. Golly, look at that gap up into that fire line. And it's coming out of a high compression squeeze. Since Friday. You know, that's one thing about being a moderator is you try to pay attention to everything. And I've been doing this for a long time, and you can't see it all, though we try to with our scans. Try to come up with a good idea. You know, I say no regrets, but for some reason that one just, I would have been looking at Twitter in the light of social media. Let's look at Pinterest. And then we're going to also take a look at Snapchat. So Pinterest is kind of interesting just because it has momentum, green 10x bars. Like, could you imagine waking up and having this on your workspace instead of, you know, having to do any ADX or DMI minus or plus blah vomit analysis? You can just look at the color. Just look at the colors. Let's take a look at Snapchat. What does that green bar signify? Well, it just means there's good continuation in buying and conviction. The market doesn't care if you have conviction. Let the market show you that it has conviction. And there's a lot of very, very simple, very, very basic market psychology happening here. Okay, you have shorts getting squeezed out. How do you get out of a short? Well, you have to buy your position back, don't you? Last time I checked. So that's what's happening on a lot of these that were heavily shorted. And Twitter and Snap are no exception to the game. Do we have earnings next week for Snap? It's literally getting more interesting every second I'm talking, because now we have a potential for a top pick that is in 1%, a 52-week high. Well, 2% now. I'm doing the quick math. The 8 is sitting at about $27, which is almost where we're at today. Let me take a look at the 30-minute chart to see if we have any squeezes, and yes, we do. Ooh, it's a pretty one. Let's take a look at the hourly. Yes. Okay, let me take a look at the open interest here for Snapper. Oh my goodness. Traded 11 million today. Let me take a look at these 18-day outs. Delta 30s, Delta 50s at 5,000. So these are unexecuted open orders. Okay, what that shows me is there's a little bit of a popularity contest going on here. Let me compare the 30th of October long calls at the money versus that 4,000, almost 5,000 of open interest right around here. And so just keep that in mind. 4,800 at the Delta 50s. Let's go into November. Actually, let's do November monthlies here. You see how it jumps up to 40,000? What was the previous number? 5,000. There's some long-term bulls here, y'all, in social. 11 million traded today. That far exceeds average I've ever seen on Snapchat for 2020. I don't even need to look at the data points. I know that. While we're here, let me take a look at Pinterest. And so what's the overall take of the market? I think we're continuing to have a decrease in volatility. You're like, no, dude, no way. We just had a huge move in the markets. No, I mean continuing to climb higher. The move where the most volatility was going higher, right? And I think it's just natural to have reversions to the mean, even if it's, hey, guess what? If it's a 400-point move higher in the Nasdaq and it pulls back 100 points or even 150 points, that's a reversion to the mean. That's not really an increase in volatility. Maybe for today, okay, I get it. But it's easier to be on the bull side than the bearish side. That's the most obvious statement that I could make. But also, why would you want to look at this chart? Especially, let me show you something else. This is to the point. Let me show you this. I'm going to detach this window. I'm going to show you something, and this is why you should consider, the things that I teach in my class. I'll bring that window up here in a second again, but let me show you something that is just truly, truly interesting. Here's charts. Okay, here it is, y'all. So this is something that I learned from John years ago. This is something that he pays attention to and something that I can really appreciate, because what it does is it draws out a correlation for you. And what's the correlation? The correlation is, if we can zoom back all the way to January 1st of this year, which is right about here. Stay patient with me. Let me show you this. Okay, and then we go here. 20 February, and we'll zoom out here. I don't see why not. Let's just do this. Bada boom, bada bing. Okay, here's all of 2020 at the very top. Here is all of 2020 in the middle. Here is all of 2020 in the bottom part of your screen. I'll zoom in one time. December, there's January. All right, so now can you see a correlation now that I line that up? Of course you can. Here's the deal. Anytime the put call ratio is under the 10 simple here, this red line, and you have the Nasdaq up, this is where hedge funds are coming in and buying. Look at the skew as well. So what happens here is, when everybody wants to be a contrarian, the fact of the matter is that the puts being bought over the calls is very, very small. Whenever the put call ratio is way up here above 1.4, my break off is 1.2, to be honest, because that's where my spidey senses go up. I look at this and I go, okay, we might have a lot more volatility. 1, 2, expect it a pullback, and it doesn't have to happen in real time. I mean, obviously, look, this is a daily chart. The skew doesn't even populate a line. This is a 1 period moving average for you. Look. Okay, so the takeaway. And if you're a new trader, I'm glad you're seeing this. I'm kind of jealous of you. I'm not a jealous person. But if I would have known this stuff whenever I was trading 8 years ago, 9 years ago, along with the other stuff that I teach in my class and that I'll show you in live trading, I would have been way more ahead. That learning curve would have shortened tremendously. And that's what I want for you, to be honest. Okay, so now that you have this information, you can go, well, maybe it's not a fantastic idea to be buying out of the money calls, or maybe it's not a fantastic idea to be over positioning. We always say that that's important, right? So I think the takeaway is the Nasdaq has a squeeze. We're very, very strong. Be careful. We have expiration week this week on Friday. And the skew is down, and the put call ratio is down below the 10 period moving average. We have a lot of tech, a lot of the big cap market names having one hell of a day. And then some other interesting things. Here's Virgin Galactic. I remember going to those Virgin record stores whenever I was a young kid. out in, I believe it was out in Grapevine, Texas. What is that, northwest of Dallas? Southwest? Doesn't matter. It's there somewhere. I mean, maybe it's not open now. But Grapevine is still there. Okay. So what I'm looking at here is this for a continuation further down. I'll show you a daily time frame. You can see why. You have bearish momentum here on the squeeze. You might be resting back and taking a pullback here down to the 4-hour 21. And what's great about trading Virgin Galactic is you would be surprised by how much easier it is, because you only have 8-cent wide spreads at the money for something that, one, I mean, it's had some decent volatility. I know that it's pulling back right now, but the open interest is there. The volume is there. Look at the Delta 30s going into November. Out of the money calls, very, very cheap, about $1 and 6 cents wide. So get this. What this means, if I'm translating this to a new trader, is it's easy to get in, it's easy to get out. You're trading 8.5 million contracts. You don't have to, when there's a wide spread, whenever you're trying to get out of Tesla or something like that, and you might be wrong in the trade, you got to pay up for it. And in this case, any spread that's tight, things like Netflix, Amazon, most of the time, the big names that get a lot of attention, you're not going to get penalized for trying to get out. You can actually ask your price and have a higher probability of getting filled, which saves you money, and it's just, minus the headache of having to deal with anything. And then finally, Nvidia. I know we looked at this a minute ago, but I love the green 10x bars. I love the fire line coming in here and momentum going into that fire line, 597. It's a pretty, Nvidia is clearly not shy of making 20-point moves. And so that's my takeaway. I think my top 2 picks are going to be Nvidia, and then also going to have to be Wayfair and Carvana if they can start to, show a little bit more momentum in the next coming days. And I want to thank you for joining me. That pretty much wraps it up. I would say be patient if you are trying to buy GLD. If you are trying to jump in and kind of see what I'm talking about with the live trading, go ahead and get on simplertrading.com/micro so you can find out what I'm teaching. It is one of the easiest ways to grow a small account using micro futures. If you're not familiar with that, I can tell you all about it. So they're basically 1/10 the size of E-mini futures, which means lower capital requirement, lower margin, easy trading, just as liquid as the S&P, is just as liquid as any other future, and a really good way for stress-free trading. Also, you can trade it in the extended hours, the overnight. You don't have to trade it during the days. It's most excellent. So hope to see you there. We're going to start live trading tomorrow, but you will also have the opportunity to get whatever package you want still. All right, everyone. Thank you so much for being here, and I will see you in the next update.